The US economy is about to experience a major shock as a result of the tariffs being imposed by President Trump and the associated trade war. And there's one major indicator that all of you need to be following in order to see how big of an impact this trade war is going to have on the US economy. And that's the traffic that's arriving at US ports. The traffic that is arriving at US ports and that is scheduled to arrive at US ports in the next few weeks has absolutely crashed. Very, very concerning. And in this video, I'm going to talk about the extent of this crash in the traffic at major US ports, particularly on the West Coast. And I'm going to talk about the consequences that this is going to have for the US economy. Now, as many of you know, on what he calls Liberation Day, President Trump imposed very, very serious tariffs on all of the US's trading partners around the world. These tariffs impacted our trade with Asia most severely, and especially with China, where tariffs are up to 145%. Now, as a result of these extremely high tariffs, US purchasers have cut their orders, and Chinese manufacturers and shippers have basically stopped shipping goods towards the United States. So a lot of these goods are just piled up in the factories in China. There's already been layoffs in some industries in China. Some of these goods are being piled up at the docks in China. But the bottom line is that these ships aren't coming towards the United States. In fact, some of these ships have actually turned back midway. And so as a result, the traffic of ships arriving at US ports on the West Coast that receive this merchandise from China is already declining, and it's actually crashing. Now, to give you an idea, the executives at US major ports on the West Coast, which are Long Beach, Los Angeles, and Seattle, are talking about declines in ship traffic and container traffic of somewhere in the order of 40 to 50% in the next few weeks, and that could actually increase going forward. That's a huge decline. Now, port traffic is also expected to decline, but less so on some of the East Coast ports, and that includes New York, New Jersey, and Savannah. Traffic at those ports is approximately expected to decline by around 20% in the second quarter of 2025, and also in the second half of 2025, as long as these tariffs remain at relatively high levels. Now, some of you may be asking, well, what's the big deal if we no longer have all these container ships coming into US ports? Well, it is a pretty big deal because goods that come in from China particularly, but also from other places in Asia, are a big part of what Americans consume. And so it's not just that we as consumers are not going to have available to us some of these goods and services, which is obviously going to be an inconvenience and a bit problematic and could also cause inflation. It's also that a lot of people that depend on this commerce could actually lose their jobs. A lot of businesses that depend on this commerce could actually go out of business. So if at a store, we have a situation where shelves are empty, we need fewer stockers. At those stores, we also need fewer cashiers. We need fewer sales associates. The people who work at the warehouses where these goods are warehoused, they're going to start laying off people. And especially in the trucking industry, the truckers that move these goods and services out of the ports into the warehouses and from the warehouses to the retail outlets, their routes are going to be seriously cut, and a lot of truckers are going to be losing their work. So this is something that affects a whole broad swath of American society, since a lot of the goods that we consume actually come from China and some of these Asian countries where this trade is being disrupted. Now, there are going to be certain industries that are going to be hit really hard. And one of the industries that is going to be hit really hard by this is US agriculture, because other countries, and especially China, are taking countermeasures. And so they're also erecting tariffs on US agricultural products, since the US is a big agricultural exporter. And some countries are just stopping their purchases of U.S. agricultural products altogether. And according to executives in the agricultural industry as a whole is already in a major crisis right now because a lot of the farmers and a lot of the firms that sell these products basically have lost their largest customer. I mentioned before that the transportation industry is going to be devastated by this. But perhaps the industry that is the most important one that we really have to watch is the manufacturing industry, because US manufacturers depend greatly on components that come from other countries and China in particular. In fact, for US manufacturing industries, China is the main foreign supplier in 16 out of 17 industries, and it's actually second in the 17th industry. Now, about 20% of the goods that are produced by US manufacturers are actually foreign components, foreign content. And just about everything that's produced by a US manufacturer contains at least some little bit of foreign and particularly Chinese content. Now, what happens is that anytime you have a complex manufacturing process, even if you have a very small component that's missing, the entire production process, the entire assembly line essentially grinds to a halt. You can't actually build the product unless you have all of the components, and you certainly can't ship those products to market if the product isn't complete and functioning properly. Now, in the cases of many of these products, US companies are able to switch suppliers. They don't necessarily have to get that particular component from China. They might be able to get it from a US manufacturer. They might be able to get it from a manufacturer in Canada or Mexico or maybe South Korea or some other country. But there's going to be quite a few cases where companies are not going to be able to find alternate suppliers quickly. It's going to take time for alternate suppliers to be able to produce and replace the supplies that are being currently supplied by Chinese firms. And in some cases, there isn't going to be any companies that are going to be able to replace the Chinese production at all. There's certain very specific areas where China is essentially the sole supplier of certain critical materials. One example is certain rare earth materials that are highly processed, and where the only place in the world where these materials are actually processed is in China. There's also certain electronic components that are used in a whole wide array of manufactured products that are essentially only manufactured in China, and it'll be very, very difficult to replace those supplies. So there's a very serious chance here that we're going to have a very, very big negative impact on the supply chain that feeds into US manufacturers, and this is going to cause a really big decline in production in US manufacturing in certain industries. That'll end up causing certain companies for their profitability to fall. It'll actually cause some companies to actually lose money. Some companies may actually go bankrupt. And a lot of them are going to lay off workers because, again, they're simply not going to be able to produce goods at the same rate that they did before. If at all, these guys they're going to be missing some components that are needed to produce these products. So as you can see here, there's a demand side impact to the impact of tariffs and a supply side impact. The demand side impact is very important, and actually more important than a lot of people think. It's not just that the shelves are going to be empty and we're not going to be able to, for example, have the toy that we want. The fact of the matter is that a lot of jobs and a lot of businesses depend on the commerce that is supplied by foreign producers that we trade with. But even more important than this is the supply chain problems that this is going to create. US manufacturers depend on foreign suppliers and on Chinese suppliers in particular to produce goods and services. And so these tariffs and these supply chain issues that I'm talking about here are going to have a major, major negative effect for US manufacturers. Now, one question that a lot of people have is, well, what happens if President Trump is able to strike a deal really quickly with a lot of these countries and with China in particular? Well, first of all, there's really no evidence that the US and China are actually negotiating at all right now, and any deal would actually take a pretty substantial amount of time. And in any event, any deal that's negotiated is likely to still involve a certain level of tariffs that was a lot higher than it was before. So even in a best case scenario where a deal is struck with China, things aren't going to go back to the way they were before. And this is going to be a shock on the US economy. But the other issue that we really need to look at here is that now that this disruption has been caused in supply chains, it's actually not going to be that easy to reestablish these supply chains. That's going to take a while. For some products, it won't take that long. It could just take as little as a month, which is about how long it takes for goods to work their way from China onto our shelves here. But there's going to be quite a few industries where reestablishing the supply chain could take a matter of months, even just based on the very minor disruption that we've had in the last month. And every single week that passes, there is sort of a multiplier effect in that 1 week of supply chain disruption causes a lot more than 1 week of delays in the reestablishment of that supply chain. So if these disruptions last for even just a few more weeks, in the case of many industries, it's going to take many, many months, 6 months or 12 months even, for the supply chain to normalize. So this could actually have a very lasting impact on the economy in the intermediate term. Now, all the information that I've given you here is non-political. I'm not taking a stand about whether these tariffs are the correct thing to do or not the correct thing to do. A lot of people think that this is a necessary step, that the United States needs to be able to sort of withstand this pain in the short term in order to correct a long-term problem that's been building up for a very long period of time. I'm not taking any kind of a political stand on this issue. The only thing that I'm pointing out is that the disruptions that are going to be caused to the economy in the short term and in the intermediate term are a lot larger than I think a lot of people appreciate. Now, as a result of these large disruptions, both on the supply side and the demand side, we think that this is going to be a major factor in probably inducing a business cycle recession in the United States. And that's a pretty big deal because during a business cycle recession, a lot of people lose their jobs, a lot of businesses lose profitability, and a lot of businesses end up going out of business. But this is also going to have a big effect on the stock market because generally, when there is a business cycle recession, the US stock market experiences a bear market decline of 20% or more. And we certainly think that this is not going to be any exception. In fact, we think that if we have a business cycle recession as a result of this trade shock and some other things that are going on in the economy that I've described in other videos and articles of mine, we're going to end up getting a pretty large decline in the US stock market of 30, 40, even 50% would not be at all unusual. And the reason for that is that before all of this happened, before this trade shock occurred, valuations of US stocks were extremely high. And generally, after a bear market, and particularly a bear market that's associated with a business cycle recession, valuations not only tend to come back to normal, but even overshoot on the downside and go to sort of below normal levels. Now, if we just come down to normal levels, that already implies a decline of about 50% from peak to trough in the value of US stocks. That's a very severe bear market. And of course, there's a possibility that if history repeats, there's going to be an overshoot and valuations could actually go well below normal during the course of this bear market, which implies that valuations could go down 60 or even 70%. Now, I'm not ready to make any predictions right now about whether this decline is going to be more on the order of 30% or if it's going to be more on the order of 50%, because we're just going to have to see how long this trade war actually plays out. We're going to have to see what kind of negotiations are accomplished in the next few weeks. But the potential for a big decline in stocks as a result of a severe business cycle recession is definitely there. At the very least, because of the damage that's already been created, I think that we're almost guaranteed to have some sort of a business cycle recession, even if it's a mild business cycle recession at some point during 2025. And that means that I think that the US stock market is actually going to make new lows. In other words, the lows that we saw in early April, I think we're going to go substantially below that, even in the best case scenario where we only end up having a relatively mild US business cycle recession. So the question is, as an investor, what do you do about this? Well, there's really two different routes that you can take. And I have two different types of portfolios where I show my clients how exactly what it is that I'm doing and how it is that I'm doing it in my own investing. I have one portfolio that I manage through a service called Successful Portfolio Strategy, which is on the Seeking Alpha marketplace. This is a much more conservative portfolio, which just about anybody can implement, even if you don't have very much investing experience. And this is going to be the most, let's say, appropriate product for most people. And we're going to be doing some things there where we'll be able to take advantage of stock prices actually falling. But more than anything, we're going to be trying to take advantage by sidestepping the declines that I foresee coming and having a lot of cash available to buy stocks at cheap valuations when those opportunities arise. Now, I have another service that's much more aggressively trying to take advantage of this decline in stocks, and it's called Crisis Opportunity Portfolio. Now, this portfolio differs from the other in that I not only buy and sell stocks, bonds, ETFs, and funds, but I also use options. And options allow you to much more aggressively take advantage of this type of environment that we're in and potentially make much higher profits. Now, it's also more risky and more money can potentially be lost. But to the extent that you are, let's say, quite convinced that the US economy is going to be going through some difficult moments during 2025 and that the US stock market is going to be having some pretty heavy declines, this particular product and this particular portfolio will be a great opportunity for you to see how to take advantage of this situation and make gains of several 100%, because those are the types of gains that a person is able to make when you use options intelligently to take advantage of this type of scenario. For example, during COVID, in one of my products, we had gains right after COVID of more than 2,000%. Now, I don't expect necessarily that situation is going to be repeated here, but certainly gains of over 100% are very achievable in the event that we end up having a business cycle recession and we have a major decline in stocks that will enable us to both take advantage of that volatility on the downside, but also the volatility that's going to be created by the recovery. So the main message that I want all of you to come away with from this video is that the shock to the US economy that's going to be happening as a result of these tariffs is going to be a lot bigger than people think. And the main indicator that I want you all to start following, and you just Google it, you Google things like port traffic, and you'll end up seeing articles, and there's actually websites that are devoted to tracking port traffic at the different ports in the United States, particularly Long Beach and LA and Seattle. And so track that carefully, because if we continue to have a crash in the port traffic at those ports, that is going to essentially foreshadow a sort of a crash or mini crash in the US economy as a whole. So thank you very much for joining me, and we'll see you next time.